Joining me now for more on market action in Europe is Chris Rhodes. He's president of ICE Futures Europe. Chris, welcome.
Thank you for having me, Kristen. It's a pleasure to be here.
Yeah, it's great to have you, of course, joining us from London this morning. And there has been a lot of news this week. We've seen the European Commission and Germany announce some of the biggest economic policy changes in decades, including increasing defense spending budgets. What is the market reaction that you've observed?
So I think before we get to the market reaction, let's just unpack the size and scale of the fiscal loosening from the German government. Obviously, it includes defense, and that's well covered. But one part that wasn't well flagged by the market was a 500 billion euro increase in infrastructure spending, and that's a fairly permanent fiscal expenditure that will invest in the Eurozone economy and the German economy more specifically over the years to come. That wasn't factored in by markets, and hence you've seen a dramatic repricing of European fixed income across the curve. The 10-year German Bund has increased by 30 basis points this week and now trades at 280 for a 10-year, and that's about 43 basis points from where we closed the year last year. So it's been a dramatic repricing in Europe, and it's definitely going to go down as one of the most historic moves in the recent history for Germany.
What has been the response in terms of trading volume to those changes?
So as you would expect, trading volume is very high. The futures market often acts as sort of the hedge in those moments. And so in ICE's Euribor futures contract, which is the benchmark contract for European interest rates at the short end, we had his record volume on Wednesday of 7 million contracts across futures and options. And that comes at a time where open interest is already at recent highs. And so that's a good sign that investors are turning to the futures markets to hedge price risk on interest rates. And I think an important point is really this comes in the same week as the ECB cut interest rates by 25 basis points.
So the European Central Bank, as you mentioned, cutting interest rates for the sixth time since mid-2024. They went to 2.5%. How are we seeing traders price in perhaps another cut in April?
So it's really extreme caution. And I think if you look at the tone of Christine Lagarde's comments yesterday, it was about leaving options open. On the one hand, central bankers have got to reconcile greater fiscal spending, higher growth, higher inflation prospects. That comes at a time when there are trade tensions and tariffs on the horizon. So on the one hand, you've got to risk the GDP. On the other hand, you've potentially got a boost. And so leaving options open, I think, is the order of the day. And that's really what you're seeing futures pricing say at the moment. If you look at Euribor and the ESTR futures contracts at ICE, it's predicting around 2% interest rates for the ECB by the end of the year. That's roughly 50 basis points off of where we currently are, likely to be 25 basis point cuts over the near term. If you look across currencies, though, there's a very different picture, and so I think it's a difficult, challenging time to be a central banker at the moment.
Well, last year, a big theme, certainly in the rates markets, was monetary policy divergence, Chris, especially between economies like the U.S. and Europe. Do you see that continuing?
Well, I think if you stand back and look at the drivers here in the wider economy, it's all about trade and about uncertainty. So therefore, the impact of that uncertainty is going to be uneven. So that would support that divergence theme that we've had within our portfolio of products for many years now. In UK interest rates, we're seeing very robust volumes, and we're seeing interest rate cuts being priced on the horizon. And then you turn to the US, where the Federal Reserve is expected to cut rates this year, although it's not really a consensus view about how many cuts we're going to get this year. So I think that divergence theme is going to be a sort of a permanent factor. And I think you're seeing that in currency markets. You've seen the euro increase this week, by 4.5%, which is one of the strongest weeks we've had since 2022. So I think overall you're going to see an increased demand for hedging products such as futures and options, and that should be a robust backdrop for our business.
And during your press conference, Chris, on rate cuts, ECB President Christine Lagarde did refer to the high-level uncertainty unfolding right now in the global economy, including, of course, trade policy, as we've seen play out here on Wall Street. So aside from Euribor, what other tools does ICE's interest rate complex offer to help customers manage price risk?
That's a great question. And recently, we've had a lot of success with the launch of the Ester futures contract. That's a different rate to the Euribor contract. The Euribor is a term credit-sensitive rate. Ester is the overnight deposit rate in Europe. And recently, we've seen a dramatic increase in our open interest and our participation. We're above 1 million contracts of open interest. That puts ICE as the clear market leader in this space. And what we're really giving is our customers choice between tools. So sometimes they want to hedge credit-sensitive rates with Euribor. Sometimes it's more about the immediate overnight rate. And we offer those products to trade alongside each other with offsets within our clearing system. And that is a compelling offering at the moment. And that's why you've seen nearly 250,000 contracts added to open interest in Ester over the last 3 months.
All right, Chris Rhodes, president of ICE Futures Europe. Thank you so much for joining in. Such an important conversation to have.
Thank you for having me.